Hi everyone, today we are going to talk about the quarterly results of Bandhan Bank. Bandhan Bank, which is the youngest private sector bank in India, reported solid Q2 earnings with net profit increasing by almost 47% on a year-on-year basis. As we all know that Bandhan Bank is the first microfinance company which got converted into a full-fledged universal bank distinct from small finance banks. The bank's performance has been impressive since its inception, that is almost last 3 years, and the trend continued in Q2 as well. So let's look at what are the key highlights of Bandhan Bank's Q2 performance. The first is best-in-class margins. Bandhan Bank's margins at 10.3% is best in class. It's despite a rising interest rate scenario, bank managed to maintain margins at 10.3%, which is stable on a quarterly basis and a significant improvement almost of 100 basis points on a yearly basis. Thanks to its high-yielding portfolio and low cost of funds, the margin performance continues to be superior. In addition to high margins, the bank's low cost-to-income ratio is a key differentiator and profit driver. The improvement in the operating efficiency with cost-to-income ratio falling to 33% as compared to 35% is very good and is a very good performance. The next and the most important driver of its profit has been the robust loan book growth. Bandhan Bank continued to grow its loan book at an accelerated pace of almost 51% on a year-on-year basis. As we all know that it's a micro lender, as 86% of its advances are towards micro lending. However, the bank is making efforts to diversify its portfolio. The non-micro lending portfolio, which consists of the retail loans like two-wheeler, personal loans, etc., grew by 92% on a year-on-year basis, though the base is really small. The next is that in a very short span of 3 years, the bank has almost created a formidable deposit franchise. Its CASA ratio at 36.9% is very good, and it has improved by almost 9% on a year-on-year basis. And last and the most important thing is that the bank continues to enjoy impeccable asset quality with the gross NPA ratio at less than 1.5%. Having said that, the bank recently declared that it has exposure to IL&FS of almost 300 crores, which is a standard asset as of now. So overall, Bandhan Bank's performance continues to be superior in terms of profitability and asset quality when compared to the 3 listed small finance banks. Its performance stands out even when compared to the larger private sector banks. The stock has recently corrected 30% from its 52-week high, and this was because RBI restricted the branch opening for the bank. This is again because the bank did not comply with the licensing norms of bringing down the promoters' holding from around 80% to 40%. Near-term upside to the stock may be limited because the stock is already trading at 4.5 times FY20 book. Given the ROA of almost 4.1%, the steep valuation isn't a surprise to us. But we think that promoter stake dilution can remain an overhang in the near term. Investors who are looking to buy a quality franchise operating at the bottom of the pyramid may look to utilize any adverse market movement to buy into the stock.